Most people would say that the insurance space is highly competitive and crowded. But what if you could create a blue ocean strategy in a red ocean? A guest has achieved that with his platform, and we'll be exploring that in just a bit. Hello, and welcome to the Predictable B2B Success podcast brought to you by Sproutwith.com. I'm Vinay Koshy, and our guest today is Hadi Radwan. Hadi, you're a serial entrepreneur, venture builder, and insurtech expert. You're also the co-founder of Stay, an insurance company that aims to make income insurance accessible to everyone, regardless of gender, income, or age. Now, you've had over 15 years of experience in managing, creating, and developing growth strategies for startups and large organizations. As a venture builder, you specialize in new market entry, multiple discipline leadership roles, growth hacking, and capital raising. Hadi, I'm curious, what was there a particular incident or event that triggered this journey into trying to make income insurance accessible for folks in the United States?
Thank you for having me, Vinay. It's a pleasure being on your podcast, and thank you for the kind introduction. We've been in the industry for quite a while. Me and my co-founder, I've been personally around 13 years now in the insurance industry, and I've came across a lot of pain points in the market across almost like 4 continents that I've worked through. And one thing that attracted us to what we call income insurance was few facts. If you go to the US and ask 10 people, do you know what disability insurance is? 5 would say no. The other 5 are probably familiar with it because their employer has offered it to them. 1 or 2 might be educated enough about the importance of buying it individually. So they would be working with maybe a financial planner or the broker of their choice, and then they buy it. And then you look even further, 1 out of 2 US citizens are living paycheck to paycheck. So if you look at disability insurance, or what we call income insurance, which is a type of insurance that essentially is protecting your income and not your disability, because your disability is something you cannot prevent. You can take preventive measure, but if it happens, and that means it's not just falling and breaking your leg or having a car accident. Actually is 80% of the time illness related, things like diabetes, cancer, musculoskeletal issues that prevents you from going back to work, either temporarily or permanently. And that puts you at a huge risk when your income is no longer coming in. How will you pay your bills? How will you pay your kids' schooling fees? How would you save for the rainy days? And if someone is living paycheck to paycheck, 1 out of 2 in that case in the US, and they're not well aware about this product, then you have a problem. So we were very attracted to making what we call income insurance accessible to everyone in the US, especially that probably 8 to 12% of the US population have some form of disability cover. And that's a triggering around. Everyone runs to buy life insurance, which makes sense, right? We're going to die. I want to protect the beloved ones. But during your career, working career, to be specific, when you're most eligible to buy life insurance, most of the time you won't need it. You only need it at a later stage in your life, when you're retired, when you're old, when you're sick. And trust me, you cannot buy it when you need it. We are very attracted to this industry because we believe there's a lot of value to be transmitted to the end consumer so that they take care of their most important asset, which is their income in that case.
Brian, this was more of a fact-finding mission, so to speak, given your experiences in the insurance space, as opposed to, say, one particular event. Would that be correct?
So nothing in particular happened to me. It's just that we found there's an opportunity in the market that needs to be flushed out. But however, things have happened to people I know in my country, which is in the Middle East. And unfortunately, this type of product doesn't exist there. It's very common to buy life insurance, but if you tell someone disability insurance, you would find that this product does not exist because It's even worse in that area, but people have no clue that they need such a product. In Europe and in the US, there is some form of education. It's not vast, as I mentioned, but there is some form of education. And in that case, there is the demand to buy this product. And then you have these insurance companies that bring the supply and say, okay, there is some form of demand. However, the product is very complex. The way to underwrite it is even difficult, because back in the 80s, specifically in the US, there were a lot of insurance companies who went out of business when it came to that line of business specifically, not in general. So they've seen their loss ratio go tremendously high, and they said, you know what, let's exit. So now what happens is the demand is still there, supply went down. So it became a little bit expensive to buy these products. And as people don't wake up in the morning and say, hey, I want to buy insurance, what they do is, if it's mandatory, like car insurance in most countries, they're obliged to buy it. So they would buy it. Health insurance is mandatory. They're obliged to buy it. In that case, the employer is obliged to buy it for the employee. In the case of disability insurance, it's not mandatory, it's optional. So only when you deliberately decide that this is something you need, you would go buy it. So you'd see that the supply for these products would be much less, because people wouldn't demand it from a mandatory standpoint.
So if it's not mandatory and you're seeing an opportunity, wouldn't it make sense to create a product and then offer it up to other insurance companies? Why delve into the technology side of things, bring that to play as well?
Yeah, there is 3 pain points here in making sure that product becomes more and more accessible. One of them is not controllable. In that case, the education of the population about the importance of this product. One company cannot do it. You have to change the way the industry thinks about it. That's why we approach it from a B2B place, where we go to other brokers or general agents that have connection to the end customer. And we say, here's the product. Here's what we think you should promote it to your customer. Here's how you can protect or shrink their income gap. And this is how we think that the education element can be handled. It would take a lot of time. Or you'd have someone who raised billions of dollars who goes out and educates the market on their own, like TV ads, Google ads, you name it, any form of marketing in that case. The second pain point was practically the way you distribute the product. And originally it was more of a manual, paper-driven initiative where customer reaches to the broker, to the insurance company, have to fill an application. The application goes to the insurance company. They have to underwrite it. Something is wrong. They would request more medical information. So essentially the cycle to get the policy issued takes weeks, if not months. So both the customer is frustrated and the one selling the policy, in that case, the broker, is even frustrated because they get paid commissions. And if the sales cycle is long, then they would probably get paid less in a particular period of time. So the distribution, the speed of distribution and the process itself is broken. And that's where the technology play comes in, where you could digitize most of the process and shrink that sales cycle down to a few days, if not few minutes in certain events.
And I'd love to explore this in some more detail, but I'm also curious, Hadi, given your journey to date, what would you say would be your personal area of strength?
You mean as a founder, right?
Yeah, and on a personal level as well.
Yeah. So there's 3 things I try to always hone, and you build them as you grow. One is being resourceful. So even if you have time, money, you have people helping you, these are resources. If you are not resourceful, meaning being able to find solutions for problems with the given constraints you have, you cannot become a founder or an entrepreneur, because the journey to become an entrepreneur or becoming a founder is full of minds. And not always you have the resources to remove those minds. So you have to be resourceful enough to find solutions for problems that arise given the current situation that you have. So resourcefulness is something I've built along the way. The second part, which is very important, is discipline. You need to be disciplined enough to know that if things don't work, and they will not work most of the time, you shouldn't quit. You should have what we call thick skin. And that discipline is built up not only just in the business world, but also at the level of how you handle your habits, how you handle your health, how do you handle your relationships. And if you build that discipline, you have what we call the compounding effect, which eventually, when you start and you understand that if you want to go to the mountain, it's not going to be a straight line. It's going to always to be ups and downs. And when the downs are much steeper, you're disciplined enough to know that if you follow that playbook or if you get that mentorship, you would adjust. And then the final part, which is very important, is grit, which ties a little bit to the discipline part. And the grit element comes from the fact that you should be able to bounce back every time you fall. And you're going to fall a lot of the time, especially when it comes to building a company. You're going to fall in front of your investors or potential investors. They're not going to give you money all the time. You're going to pitch them 150, 200 times. You have to have that grit to continue doing that, which is coupled with the discipline I talk about. You'd have also to have the grit to know that people you hire might not be the right fit. People you hire might be the right fit, but they leave and you end up being alone most of the time. Then you have to rehire again. So I think three things have helped me a lot in my journey. One is resourcefulness, discipline, and grit.
Right. With being resourcefulness, you said it's what should I say, a creative process wherein you find ways around obstacles. Would you say that it's something that businesses should know but don't?
I think businesses know about it. It's just, it's not practiced enough. And you cannot decide to become resourceful suddenly. It's a process. So, for example, personally, if you come from a family where your parents are not very attentive to you and you notice that, you might build that resourcefulness. Why? Because, anyways, it might go in both directions. But if you have the right vision or discipline in that case, you would be able to notice that, okay, I'm on my own, but I want to get from point A to point B. So how can I do it? Versus someone who actually always has someone to help him get from A to B. So the resourcefulness elements builds up, I think, from being left alone. So in my case, I'm a serial entrepreneur, but doesn't mean I started companies that worked. Most of them failed. And you learn along the way that your expectations is something and then reality is something else. And during this learning or retrospection phase, after you fail, if you go back and you look at what has happened and you think, how could I have done it differently? That builds that resilience or resourcefulness pump in your brain. And then next time you are faced with similar situations, you've thought about how you wanted to solve it. And then you go and try. If it works, now you have more, let's say, techniques or skills in your bag so you can use them later. So I think that's important. The second part after experience is being able to have access to what I call frameworks, mental models, things that in many situations you could go back to and say, if I use that framework, can I solve that problem? And it could be, there's hundreds of frameworks. There's frameworks for products, for engineering, for marketing, for entrepreneurships. So I think those frameworks would be a setting stone to guide you in the direction of how to solve that problem. So these two things are critical: experience, which takes time, and then being able to recognize that there are frameworks out there that you could study. And then in the event you want to use one that's relevant to your situation, you could go in and say, okay, I would use that framework and I would see where it's going to take me, versus just being left in the dark and then relying on someone else most of the time.
Just going back to Esther, you talked about the fact that I have a model where you use other companies to sell your income insurance or disability insurance. But as I understand it, you actually have a suite of products. Is that correct?
Correct.
That you promote and try to get out there. Um, And then there's the technology piece. I think you describe yourself as an insured tech firm. But would it be fair to say that you actually have an ecosystem with all these products and technology plays all occurring at the same time?
Yeah. So think when we say insurance technology, there's two elements here. There's the insurance part where we're actually licensed to operate and sell a promise for someone to use in the future. That's what the insurance is. You're paying for something that doesn't exist today. And if it happens in the future, someone would give you back that claim, we call it. So the insurance part is the operating entity that creates that service. And then you have the tech stack or the tech entity that powers this. This is why it's an insurtech in that sense. So our model primarily is to augment our operating entity and try to reach more and more customers to protect their income. And we have multiple products, as you mentioned, that covers the whole spectrum of incomes that you could think of. It could be people who are earning 30,000 per year, could be people earning 10 million. And each one of these categories of income have different products in the market. So we try to bridge that gap between the income out there and the products, because our mission is to make income insurance accessible to everyone. And by that is anyone with a particular income. So our limits go up to 10 million. If someone is at 50 or 100 million, that's a special case. We would be able to handle it, but we would need to partner up with someone else. In comparison to other domestic companies in the market, insurance players, the top 5, they have a certain limit they don't go over, and then they cede most of the remaining risk or partner with an international company that's outside of the US. This could be companies like Lloyd's of London in the UK. That could be one option, but there's plenty of other carriers that also take that excess risk that the domestic market does not want.
Sure. So with the partnerships that you have, you talked about the fact that income insurance is not necessarily mandatory, especially in the United States.
Yes.
So I'm curious, in what way, or perhaps this is a better question, in what way were you involved in insurance, if at all, before you started Astea, or was this a brand new venture into the US market with Astea?
Yeah, so I've been in the insurance industry for quite a while, around 12 years now. And before co-founding Steya, I used to advise on process improvements. I did internal audits and even audits, and we've done a little bit of digital transformation in the insurance space. So I've handled reinsurance companies, brokers, MGAs. We even started before Steya an insurance aggregator or a marketplace that does car insurance specifically. So we've seen a lot of the pain points in the market that are very common, and most of them could be solved by technology. The reality is sometimes these companies are reluctant to change how things are working because they're working quite fine. What we've seen today is a lot of companies are moving towards modernization of their tech stack. Why? Because essentially they could cut down a lot of costs. Two, there's a lot of IT skills gap in the market. Developers, for example, skilled in insurance are, so essentially if you want to get them to modernize your application, you'd have to pay a lot of money. The cost goes up again. And then the adaptation to the changes in business needs is much slower if you don't invest in IT. So today, if you want to launch a digital product online quickly, if your tech stack doesn't have APIs, you're in trouble, right? Because you have the front end where the customer is filling an application is not linked to your back end where you're quoting, pricing, issuing. So now you'd have that interface in the middle, which essentially would be someone typing in that data. So you're frustrating the customer, you're frustrating your employees, you're frustrating your investors. So I think with the advancement of the tech companies out there that are helping in building software, a lot of these insurance players are modernizing now and trying to understand that the way forward is digital. And we want to make sure we can provide the right value to the customer because customers don't want to wait anymore, but also provide the right value for our stakeholders or investors. And by that, we don't want to lose money. We don't want to have We don't want to buy let's say, a lead for $1 and then sell that lead for $0.50, because that's not a sustainable play at the end of the day. So that's what I've seen over the past 6-7 years before Astea, which now I've seen a lot of these pain points start to boil and raise those red flags for insurance players. And hopefully they're going to be solved and in the near future, probably 3 to 5 years. You'd see a lot of tech companies trying to help partner with these insurance players all over the world, because the global insurance industry is $1.5 trillion. There's a lot of opportunity to modernize that global market.
You make a great point there. Just listening to what you're saying, I can't help but think, so your challenge is quite considerable in that you're almost trying to educate both sides of the market, your end buyers, so to speak, but also your partners in terms of what is possible, and trying to bridge the gap on what I would assume is a case-by-case basis, given that various insurance companies have their tech stack at different maturity levels, which is quite complex. I'm curious, it's one thing to try and make your tech stack as accessible as possible to others. What sort of conversations are you having in terms of the actual adoption? I guess, what are the sticky points that tend to come up?
Yeah, I would divide this question into two different adoptions. So you have the first adoption where we're trying to get the distribution to buy into our model. Here's a different way to sell this product. Instead of emailing customers or filling applications on their behalf, you could use our tech stack and send an enrollment link and let the customer do most of the administrative work, which is not usually long, few minutes. Let them put their credit card information, and you should get paid for the effort you do to advise them rather than to administer them. So that's the first pain point we want to eliminate. And it takes time because you need to onboard them, educate them, and then walk them through the technology stack, and then repeat that because they might try it once and then they go back to their old habits. So it's an iterative process that needs some time. So that's one way to increase the adoption from the distribution partners who don't care about technology. They probably care, how can I get paid fast? How can I service my customer better? How can I have more variety of products to upsell? Then you have a different distribution partner who are very involved in the tech, and they want to white label things. They will say, hey, I want my brand to be at the forefront. I want you to power my distribution. Can you do that? So in that case, the adoption, usually it's easier from the sense that they are convinced that they need to do it because they have approached you. But where does it become harder is when you say, okay, but this is not free. If you want to build it, it's going to cost money because it is as if you're custom developing something for yourself. And this is where I believe there's a lot of room to make the tech stack adaptable and modular and flexible for these type of distribution partners who are willing to invest, but want the freedom and flexibility to do it themselves. So I think it's a different type of adoption, let's say, problems to solve, but they're not difficult problems. It's just the time element is something to consider here.
Okay. So from an insurance agent's point of view, apart from the ease of being able to sell such a product, and of course the commissions and things that they can acquire, is this just an upsell, a potential upsell for them, or is there more of an incentive for them to educate clients and offer this as a key part of their portfolio?
Yeah. So there's three things I would look at here. One is a broker or a distribution partner. They have a portfolio of clients. Their goal is to give them the right protection service. So that could be, I'm protecting your health. I'm protecting your income in that case. I'm protecting your life for life insurance. I'm protecting your car. So they have a portfolio of clients. So one initiative for them is to see if there's a gap. If there's a gap, they're not upselling them anything. They're just saying, there's a gap. Here's a new product that would help you reduce your risk, your overall risk. And then there is the opportunity to look at the current products that their customer has and to see if there's a gap in the product that they've bought. So for example, if you've bought an income insurance in general and you earn $1 million per year, you bought protection for $100K. So you're still exposed for 900K. This is where there's an opportunity to upsell, to say, hey, you still have a gap. I have the ability to plug that gap. I have this product. One is selling, one is upselling. And then the second part is practically for the continuity of the broker. Because at the end of the day, you have a portfolio, you need to monetize. There's two ways you can monetize. One is you can sell more to new clients, or you could upsell existing clients and make sure you renew them every year so the churn doesn't go away. And then the final one, which is a hidden, is your cash management. So how fast can you get paid from these insurance companies? Because today you sell a policy, you don't get paid immediately. You have to wait on average 30 days, let's say, depending on the product. Could be 45, could be 15. But on average, it's 30 days. So you have that working capital gap as a distributor. You're paying maybe expenses ahead of collecting your revenues. With us, we want to shorten this. And we say, hey, if you sell our product, which is fully digital, we're getting paid immediately from the customer. They're putting their credit card, we're getting paid immediately. It's just fair that we pay you as well as fast as a few days. So we've shortened the working capital gap for that. And now it's not just about making money, it's about collecting the money. And this is where it's a big advantage for brokers.
I can see the value in that. I'm sure they appreciate it as well. I'm curious, as you reach out to potential partners and try to keep them abreast of everything that's happening, how do you stay top of mind in all that's happening in their lives?
This is a great question, Vinay, and I think it's a continuous effort. So one is we have a blog. We continuously update it with very recent articles that talk about income protection, life insurance, general things around income, even savings are what we tackle some of these topics. So we have our blog. Second is we have press releases that we do on every event, major event that we come across. Could be a new product, could be when we raise money, etc. The third one is podcasts, like I'm doing with you, right? Because you have a listener base who are huge. They probably are not our target partners, but they are our target customers. And if they know someone, a broker that they work with, they could tell them, hey, you know what? I'd like to consider this product. Could you help me? And then they would reach out to us and hopefully we would educate them on our products and on our technology stack. And then finally, I think it's organic. The more people learn about us, the more they want to use us. Even the more partners we come across, they would tell maybe there's in the brokerage world many levels. So we try to target level where you have a broker general agent and they have multiple agents under them. And I think that strategy has a cascading effect because if you make sure you deliver great value for one, they would tell for someone else, especially that sometimes there is some interrelationship between the rewards between each other. So I think these are the major channels I follow so far.
Okay. Really a lot of education, getting the word out there. In terms of the actual contact that you have with them and getting feedback and iterating on your products, how does that occur?
So we have an email list with them. We have contacts to them. So it's more of a fluid relationship. We try to reach out to them as much as possible.
Okay. It would be more of you reaching out to them and checking in to see how they're going and what issues they're coming across.
Yeah. So we always do sample calls with our active partners, say, hey, is there any features you like us to develop? Is there something that we collect what we call a customer survey. In that case, we also have a newsletter that goes out every month. So we keep them up to date about trends, about things that we've encountered in the market, some news that could be relevant to them. And definitely the announcements that are always happening, we email it to them ahead of everyone else.
With the products that you have at the moment, do you see that expanding or over time in order to integrate to more of a well-run suite that you could offer up to potential partners, or is it very much going to be honed in on income insurance?
Yeah, so today we are very focused on income insurance. It's a big market. It's an untapped market. As I mentioned, there's a lot of room for improvement. And we want to be very strong in that niche. And I think something to also keep in mind is that it's going to take a bit of time, as I mentioned, because the whole ecosystem has to work in tandem. So there's the education part, there is the ability to make sure all the products fit most of the income brackets that are out there, so that if someone comes in, they don't need to go to multiple vendors to get their income protected. And I think that is the element where we would keep on adding improvements to our existing products. So we currently have a short-term income insurance. So anything that happens to you within a year, you get paid for it. We have a long-term income insurance, so up to 5 years. And then we also have some group high executive programs. So if you're, let's say, a law firm that has 500 partners earning 5 million, this is very hard to place usually in the market. We have a program for that. We have programs for celebrities. We have programs for athletes. So we're trying to be very specific in certain segments, but also try to be vertically integrated across the whole income brackets. So there's always change. We have most of the products, probably 80, 85%. There's always, let's say, feedback that we get from brokers said, okay, your product doesn't cover a 10-year benefit period, let's say. Can you adjust that? And with insurance, the problem is you cannot switch the button on and off. You cannot change the product instantly. Every time you want to add a new product or upgrade or change the features of the product, you're in a regulated environment. So you have to submit it to regulators, get it approved. You have to do it by state because all the products are state specific. So that's the beauty about insurance and the ugliness of it. The beauty is that once you get it right, you have some defensibility. If you don't get it right, it's a problem because the environment is regulated and you are exposing people to a lot of risks. They're giving you money, you're promising them something, and then if you don't pay, it's a problem. That's why the middleman is very important. And we've never approached this from a disruption perspective, saying we need to eliminate the middleman. Why? Because insurance is all about trust. And if you want to build the trust, you need someone who's educated on the product enough to advise you with the incentives, with the alignment of the incentives. So it means they don't sell you any product just to make money. They want to sell you the product. Yes, they want to make money, but they want to make sure you're protected. Because if something bad happens to you, where's the ethical part of it? Is it just about selling? It's not about selling. So we believe the middleman is crucial and their role is well-defined in the whole insurance ecosystem.
I love that. Just thinking about the tech stack, though, given the priorities that you're incorporating in your tech stack, I would imagine there would be quite a bit of interest in the tech stack that you're using by perhaps some insurance companies in order to not reinvent the wheel for their specific use case, but to adapt something that you've already got to their own ecosystem. Is that a reality or is it a tech stack for Astrea alone?
Originally, we started to only build the tech stack for Astrea. However, in the recent year, we have piloted a few other insurance players who wanted to use our tech stack. And 2024, probably we will allow licensing for our solution. We haven't revealed all the details yet because we're updating it so that it's 100% fit for any insurance player out there who are thinking to have customization, because there's a lot of off-the-shelf products that you could buy. We're not trying to compete with those. We're trying to say, if you're in a complex business where you would like a lot of customization, well, we have a tech stack that allows you to do that with the ability to enhance and adapt to business changes as quickly as possible without breaking your pocket, because IT investment is quite expensive. And if you build it with a specific language that becomes outdated, it's a huge effort to refactor the code, to reinvest in a new IT team so that they can rebuild that for you. So we're trying to solve these pain points at the level of the license, and then we will be ready by end of this year.
Brilliant. I look forward to how it unfolds for you. Hadi, this has been terrific. Lots of great information, given that I, for one, don't play in the insurance space, and I'm sure many listeners don't either. But the journey sounds very intriguing and lots to learn from your experiences. To wrap things up, I'm curious, are there perhaps a couple of issues around this idea of insurance and perhaps more specifically insurance and the tech stack that you've created that you find doesn't get talked about very much? If so, what would they be?
So I think there's two elements. One is the general perception of income insurance. As I mentioned, I've shared some facts. One is it's our obligation to make sure people are aware that this product exists, because it's very important that you protect your assets, which in that case is your income. And your income is being generated because of your effort, your grit, your resilience, the experience you've built. And it's really so sad that this can end with one accident. All that effort that you've built over years, it could end up with one accident. And it's a shame if you're not protected, because you cannot control accidents. You cannot control illnesses. You can try to prevent them. Sometimes people are unlucky. And it's a shame if they put so much effort in their career and their families and their relationship, and then suddenly something bad happens, which puts all of that at risk. So I think that's one issue which I hope people who are listening or partners who are listening could help us spread the word and address that particular issue. And the second one is more on being adaptable from a cultural and open-mindedness perspective in the insurance space. So people who are currently running big companies, if things are working for you, that's great. That doesn't mean it will always work, because we are at a pace of change that is amazing, especially with the new technology. We've seen AI, for example, a few years ago, maybe a couple of years ago, no one was talking about AI. It wasn't in the back minds. Everyone was talking about the metaverse. And then suddenly, with the introduction of the LLMs models like OpenAI, everyone wanted now to use AI and augment their tech stack. And you see every day there's a 40, 50 AI company that pops up. Are they really innovating? Probably not. Probably they're just layering on top of their technology an AI element. And that's what we've seen in the past in insurance. And between 2000, I think 15 and 18, before that bubble bursted with the big valuations, everyone was saying, hey, we're disrupting the insurance space. What they were doing, actually, they were just building a different story, a different innovative distribution model that is digital. But there was nothing innovative about it. It's just a different way to package it. And everyone was running towards that. So I think this is an issue that we need to be very deliberate on how to address it and make sure that we do not overpromise and underdeliver.
Right. And to wrap things up, if you were listening to this episode, what would you say would be your top takeaway?
The top takeaway, which is our mission at Astea, is to try to get the word out to the end consumer to understand that they need to protect their income at any cost, because that's their most important asset, and it has some rippling effect if things happen bad. So that's the message I wanted to bring out to the listeners. I know we talked about tech stack, business models, many other things, but I think the goal why I come on these podcasts is to promote as much as possible the protection of people's income.
Certainly. And I had to say, here in Australia, it's perhaps a little more mild. We often refer to it as total permanent disability insurance, or TPD insurance. So most people, I think, would have it as part of their what we call a superannuation package. But yeah, I can understand that in many other parts of the world, it's not as well known. So there's certainly a lot of work to be done there. Hadi, if listeners are curious, want to find out more or connect with you, where would you recommend they head to?
Yeah, thank you, Vinay, for that. If you would like to check our website, astea.world, which is ASTEYA.world, so that you see all the income insurance that we offer, you can go there. If you want to reach out to me, I'm always on LinkedIn. I'm very responsive there. I'm happy to help people who want to understand more about this. Personally, I'm very fascinated with what I call principles. And I started a newsletter called Principles Friday, where I share one principle from very notable people that could help you build that mental resilience. And as I mentioned to you, Vinay, I'm very big on frameworks. So principles are one type of frameworks because you could look back to the principle could sum up an event or an experience of that person that came up with that principle and now they're applying it. And also I'm a podcast host. I have my own podcast called The First 100, where I interview founders to understand how they've acquired their first 100 customers. So if you want to reach out to me, LinkedIn, subscribe to my newsletter, and then listen to the podcast on all the platforms.
Terrific. We'll include links to that in the show notes. Hadi, this has been fascinating. Thank you so much for doing this.
Thank you for having me, Vinay.